Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been getting bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live. This is your week daily morning show where we bring you the latest in everything Bitcoin and cryptocurrency. And in today's episode, Bitcoin has dropped, and has dropped relatively hard to fresh lows during this correction. If you'll remember, on June 15th, BlackRock launched a Bitcoin ETF spot application to the Securities and Exchange Commission. That sent Bitcoin rocketing about $7,000 to the upside. And about a month ago, around July 15th, we hit a local high at $31,800. We've been in a correction ever since then, and we've entered into one of the lowest volatility periods in Bitcoin's entire history. And over the last 24 hours, Bitcoin has actually broken bearish. As we've talked about, it probably would. We've talked about how Bitcoin would likely move to a certain uptrend, and we've also talked about how it very well could drop further below that uptrend. And in today's episode, we are going to be talking about how this drop combined with two massive pieces of news coming out of Amsterdam and also coming out of Coinbase are leading to one of the greatest buying opportunities that I believe Bitcoin has seen in a very long time. My name is Jeb McAfee, also known as Crypto Jeb. Welcome to Coffee and Crypto. I'm very glad that you could be with us today. I do believe that you are going to walk away from this stream with a much better understanding of where cryptocurrency is right now and where it's going to be going over the coming weeks, months, and years. We're going to be talking about the Jacoby Spot Bitcoin ETF. We're going to be talking about Coinbase getting an FCM license from the NFA. You might be wondering, what are all those acronyms? We'll talk about those in a minute. Some government alphabet soup comes in to give some bullishness for Coinbase's stock and for Bitcoin. We're going to talk about how all of that, again, leads to one of the best buying opportunities that Bitcoin has witnessed in quite some time. Crypto Military Vet is in chat today. So is Queen and Philly Skills 1428. Joe Bollier's in chat. Crypto Mini Bike, Wreck the Bears, Rockin' Metal News, Alex Nibo, BN BTC, Crypto Alerts. Crypto Mini Bike said, let me tell you something. Chasse in chat. Izzy2K. Tomaz. Jester Ice. Justin Shaw. What's up, Justin Shaw? Good to see you. Tyler Durden. Market dropped. I need to get more downside so I can buy more. Piotr GXRP. So that's funny. They think Bitcoin don't need to... What? Not sure what you mean. I'm not totally sure. Quinn is in chat. This is Quinn Ed. Made live today. Much love, brother. Bill Cosby. We've got the pickle version of Bill Cosby in chat. Welcome to the stream, everybody. Today, we're going to start on over on CoinMarketCap. Just very briefly looking at the price. Bitcoin sitting at 28.3 right now. Ethereum sitting at 17.82 right now. They're both down, respectively, about 2% over the last 24 hours. We've also seen Bitcoin's market dominance sustaining. As we've seen these drops over the last 24 hours on Bitcoin, Ethereum, and the rest of the cryptocurrencies, Bitcoin's market dominance has managed to hold firm. Remember, there's that kind of long-term perspective that Bitcoin is gaining market dominance against the altcoins because Bitcoin is gearing up, getting ready to go on a massive run that is going to... as somebody in chat might say, wreck the bears in the longer term. The reason for that being, of course, that we have this major pressure on the cryptocurrency, specifically on the altcoin space from the SEC right now, on top of the fact that we're in what I call the pre-halving phase of the bull market. We are in bull market territory right now, but it's before the halving, so it's very, very minor. It's very suppressed. When we see the halving come in, then Bitcoin is going to kick off a very large bull market, and within 300 days, probably even shorter time than that, Bitcoin will be back at 70K. That means sometime before the end of next year. But for now, Bitcoin and cryptocurrency are slightly suppressed and the altcoins are down. Bitcoin holding that market dominance high is a good sign that all is well on the Western Front, I suppose you could say. So let's talk a little bit about the news. One of the first things I need to bring to your attention is Coinbase. As you guys know, Coinbase has come under extreme scrutiny Bitcoin has come under extreme scrutiny. I'm sorry, Coinbase has come under extreme scrutiny from the Securities and Exchange Commission for running an unregistered securities exchange. And that essentially means that the SEC is claiming that they are selling unregistered securities, and because they're doing that, they are in violation of the rules and standards for the market that the Securities and Exchange Commission lays out. So we're going to talk about two different commissions today. We're going to talk about the CFTC, the Commodities Futures Trading Commission, and the SEC. And just a brief overview, the CFTC handles what's known as the derivatives market. So they look at options, they look at futures. Those are the primary types of derivatives. But in essence, they monitor derivatives. They are in charge of derivatives. So you have your futures, you have your options, you have different types of derivative contracts over there. Then you have the Securities and Exchange Commission. They are the commission that regulate the securities market. Securities are basically certificates of ownership that represent ownership in a company and every other kind of investment vehicle that has to do with that. So we're talking about obviously just straight stocks. They also are very much in charge with mutual funds, ETFs, those kind of things that house securities because, of course, they are the Securities and Exchange Commission. So those two bodies have this powerful sway over the United States markets. If you want to operate pretty much any kind of market in the United States, you have to have approval from the Securities and Exchange Commission or the CFTC. And if you're a cryptocurrency market, well, we're kind of this newer market, so we just don't really care what the SEC says or what the CFTC says, because there just isn't a regulatory framework for cryptocurrency exchanges yet, because the government hasn't decided whether cryptocurrencies individually or corporately register as commodities or register as securities. The SEC thinks they're securities, but they're actually, believe it or not really the one that can determine that. It actually comes down to a court. The SEC brings cases before the court. One of the most famous cases is the XRP case, and we now know that according to the judge and according to multiple years of proceedings, XRP is in and of itself not a security. And the sale of XRP to the general public was not a unregistered securities offering because XRP is not a security. The reason that we're bringing this up is because Coinbase is the biggest benefactor of the news today. Coinbase just received what is known as an FCM. That is a futures commission market, and they've been given that ability to operate what is known as a futures commission market from the NFA, which is the National Futures Association, which is an NRO, a non-governmental organization that a regulatory government organization that regulates different futures. They basically give out license to operate a futures contract, futures commission, an FCM, a futures commission market. So CME, CBOE, these are other examples that would have to get certification from the NFA. The NFA is a part of the CFTC, and they're heavily overseen by the CFTC, which is again the Commodities Futures Trading Commission, which is a government department. Department of the, it's a subsection of the Department of Agriculture, actually. So you have the Department of Agriculture, CFTC below that. You got the NFA below that. The NFA issues out FCMs, which is a Futures Commission market, and that's what Coinbase has been granted. Because they've been granted a Futures Commission market approval by the NFA, they now are going to have the ability, starting from about, I want to say it was about 6 p.m. yesterday is when this news broke. Coinbase actually has an announcement on it over on their website. They are going to be able to offer Bitcoin and Ethereum futures. That is a huge deal because there's only been a couple of places in the United States market where you've been able to do futures trading of any kind on any cryptocurrency. The main one, of course, being the CME futures. You guys are very familiar with CME futures because we've talked about them extensively here on the channel. You can go to BTC1 ! And you'll see Bitcoin futures over on CME. Of course, this is where we talk about the CME futures gaps. This is where we get that kind of data. The futures markets are very important because the futures markets allow for people to basically make trades based on their prediction. So if you believe that the market's going to go up, then you make a trade based on that. And then if the market does go up, you make money. If it doesn't, you lose. If you bet that the market's going to go down, then you can bet that the market's going to go down. And if it goes down, you make money. And if it goes up, you lose. You can go into a long or short in the same way that you can on the spot market, but it works a little bit differently in and it gives the ability for individual traders to basically make a price prediction, and if their price prediction is true, then they end up making money. Or if even just the prediction about which direction the market goes is true, then they end up making money. It's one of the most popular ways of trading a market on a derivatives basis. Again, derivatives, spot basically means it's physically backed and physically settled. Derivatives means that it's not. Spot impacts the actual underlying price of the asset. Derivatives most of the time don't. And one of the biggest differences that you need here between derivatives and spot markets, of course, just trading trading Bitcoin on Binance as a spot market, trading it on CME as a future with a futures, which is a form of a derivative market, you're not impacting the price. That market is 3 to 4 times larger than the spot market. Bitcoin's market capitalization is about $500 and some billion. The derivatives market for Bitcoin alone could be valued between $2 and $3 trillion. So Coinbase, by getting this approval, was just allowed by the NFA to launch a market that could massively expand their business in a huge way. And one of the funniest parts of all of this, and why I mentioned the SEC, this is just, as I realized this, as I was doing my research, I just burst out laughing because it's so funny. The SEC, as of June 5th, I think it was when they launched their attack on Binance, June 6th, when they began the attack on, I think it was June 6th, it was Tuesday, when they began the attack on Coinbase, alleged that Coinbase is an unregistered securities exchange, which is funny because a derivative is a derivative of a security. So, of course, they didn't allege that Ethereum and Bitcoin are securities, but they did allege that Coinbase is offering unregistered securities, and the CFTC, if you want to say rival or maybe you could say colleague regulatory body, comes in and says, we will give you a futures commission market, while the SEC is saying, we're going to try and shut you down because you're running unregistered securities. So one regulatory body, the CFTC, is saying, you got the green light, go for it. And the SEC says, we're going to shut you down because you're in violation of the law. And the other reason why this is so funny is because all in 1 week, Gary Gensler has just been absolutely ripped apart. I mean, the guy has just been, he got left out to the vultures, the poor fella. Not just has the CFTC, through the NFA, given an FCM, a futures commission market, to Coinbase, giving them the ability to trade futures, which is a huge, this is probably one of the biggest bullish developments that Coinbase has had happen to them in a very long time. They've been trying to get this thing for 2 years, and they finally got it. Not only is this a huge deal for Coinbase, this is also a big deal for Bitcoin and institutional investor adoption and institutional just ability to take the market seriously because it's gotten this approval. At the same time that Gary Gensler is getting egg on his face because of this, the Jacoby Spot Bitcoin ETF goes live in Amsterdam 2 days ago on August 15th, which is the first Bitcoin spot ETF in history. And the reason that that's so funny is because the SEC has been shooting down Bitcoin spot ETFs like I don't know, like an AA gun in the battle of in Pearl Harbor. Like it's just boom, just get out of here, just getting rid of all the spot Bitcoin ETFs. And finally, there has been one approved on one of the largest exchanges in the world, outside one of the largest international exchanges outside of the United States. So that just goes to show you that the EU is willing to have a spot Bitcoin ETF, and at the same time, the United States regulator that is a compatriot of the SEC is willing to give Coinbase even more ground to go and expand his business operations stateside. Gary Gensler, I think, should realize now that in his purported plan to try and not get egg on his face by allowing for spot Bitcoin ETFs and cryptocurrency trading to happen in the United States, because he's worried that grandma somewhere is going to invest in Bitcoin, it's going to go down, and then somebody's going to call the SEC and complain. He's also now got an egg on his face because he's going so far, so powerfully against the tide of Bitcoin and cryptocurrency adoption that he's starting to look like a fool. He's starting to look like a fool on Capitol Hill because Amsterdam's willing to give out a spot Bitcoin ETF. Why are the Europeans beating the Americans? Is it not normally the standard that the Europeans follow the Americans in most things? Is not New York the financial hub of the world, or is it now Amsterdam? Like, what's going on here? I'm not knocking the Europeans. We're good friends with the Europeans. Nate, look, I'm allies, friends, not saying anything on that. I'm just saying that Gary Gensler, when he has to appear in front of Capitol Hill, you've got to wonder if a lot of different Congress people are going to be looking at him saying, so wait a minute, why did that get approved in Amsterdam and not here? Why are they the ones leading the charge on a new industry and we're not? It's a good question. Why is Coinbase able to operate futures, which is a derivative of a spot market, that on the same market the SEC is alleging is allowing unregistered securities? Basically the CFTC's way of tacitly saying in a roundabout way, kind of like peeking around the corner and just whispering it really quickly, saying, yeah, the SEC is full of it. Like, it's nonsense. it's very humorous to me. So all of this gives a great setup for Bitcoin because Coinbase getting an FCM, a futures market, and Amsterdam launching a Bitcoin spot ETF, the Jacoby Spot Bitcoin ETF, both huge bullish news. Massive, massive, massive bullish stories. Some of the most bullish stories that we have seen in a very, very long time. I'm going to stop for just a second. I'm going to read chat, but then we're going to go ahead and talk about the Bitcoin market because, of course, Bitcoin has not rallied as much as you would think. In fact, it's dropped. So the question now becomes, if we've had huge bullish news coming in on Bitcoin, then why did Bitcoin drop? And where are we going next? All right. Thank you guys very much for tuning in. Brief Crypto is in chat. Web3 Superstar is in chat. Queen is in chat. Piotr is in chat. Piotr, I'm not exactly sure if I'm pronouncing that correctly. If you're a BlackRock, Daniel Eklund said, if you were BlackRock, would you not try to crash Bitcoin just before the ETF to secure your position? Yes. If you were BlackRock, you probably would do that because you would probably get away with the market manipulation. We'll talk about that in a moment. It's a very good point. By the way, if you're enjoying today's stream, I want you to do a couple things. But first and foremost, hit the like button, subscribe to the channel. Let's see if we can get to over 100 likes here in just the next couple of minutes. Thank you guys so much for tuning in. If you want more coverage and perspective on the current stories that are happening in the cryptocurrency space, you found the right place. Make sure to hit that subscribe button. Speculations on YouTube are great on every channel. It's bull market before having up and down. I'm not exactly sure what you're saying there. Because the European Union believe on crypto more than the USA. That's true. That's absolutely true. There is a general governmental approach to crypto in the EU that is more friendly to crypto than the United States. But when the United States starts getting left behind with crypto adoption and crypto innovation, many people, these people being voters, are going to start to wonder, wait a second. I thought the United States was the land of innovation. I thought we were the ones that created the telephone. That's why we don't have to put a number before our our mobile phone number. I thought we were the people that invented electricity and modern light bulb and the internet. I thought we were the people that did all of this. So why are the other nations of the world doing this? Bitcoin, the United States isn't getting left behind, is it? And you start seeing people on both sides of the aisle. This isn't even really a political issue. Start saying, well, wait a minute. Why are we the one leading on that? It's a little bit like artificial intelligence. Pandora's box is open. It's coming. It's going to happen. You cannot stop it. Either everyone has it or no one has it. And by the way, you can't stop it, so no one having it is not an option. Everybody's going to have it. Crypto, AI, they both exist in that similar dichotomy. Either everybody gets access to it or nobody gets access to it, and it's not an option for nobody to get access to it because it's an unstoppable force of nature at this point. So why then is Europe leading the charge on spot ETFs and not the United States? People are not going to be very happy with Gary Gensler here in 5 years because they're going to see him as the guy that stood in the way of an unstoppable torrent of history. And they're going to regret having Gary Gensler in power in that regard because they were not able to invest and use a Bitcoin spot ETF, even though the rest of the world was starting to move in that direction. It's okay. Piotr, it's Peter. It's same name like Peter. I see. Well, shout out to Poland. Let's see. Good day from Africa, Namibia, 4:18 p.m. What's up, Manzi? Manzi? Is it a hard A, soft A, Manzi? Manzi. I bet you it's Manzi. Manzi Thomas. How are you doing, Manzi? Jeb, do you have Tesla stock? I don't, because that PE ratio is whack. If you don't know what a PE ratio is, that's the profits to earnings ratio, and every company has one, and normally it represents the whether the market's overvalued or not based on how much money it makes. The PE ratio, let me just find a little bit of a better definition. The way of valuing a company's price to stock to its earnings. I'm sorry, I think I said profit to earning. The price to the earnings ratio. My apologies. The PE ratio on Tesla is ridiculous right now. It's absolutely ludicrous, and it has been ever since the pandemic. The thing you have to keep in mind, of course, is that Tesla is not just a car company. You know, you've heard the whole mantra, it's not just a car company. It's not just a car company. It's not just a phase, Mom. It's not just a car company. That's true. It's not just a car company. But what makes most of their money is cars. You can say the cars are fancy technology, and they are. You can say, oh, self-driving, that's $5,000 to the MSRP, and it does. You can say, oh, but they're also more like an energy company because they do batteries, and they do. But what makes them the most of their money is cars. They're a car company at the core. And at the same time, there's a lot of mix-ups going on right now in Tesla's leadership because many of the major investors in Tesla are saying, wait a second, Why is Elon Musk off gallivanting with 15 other companies? Isn't he supposed to be the CEO over here? Maybe we should have a different CEO. House divided can't stand. And in the major shareholders at Tesla, there are some principles of a house being divided. And by the way, with a company that large, you'd think you'd have a slightly higher quality product in some areas. I'm not saying I don't like Teslas. I would love to have a Tesla one day, but ultimately, I do think the company might be a little bit overvalued. I'm not going to jump into price predictions or anything on it. I'm not a Tesla investor, and so I'm not a Tesla expert. I try to be an expert in the markets that I am invested in. But I do believe that Tesla will succeed long term. I think it will continue to grow, and I'm not saying it's a bad investment, but I would prefer to buy a strong dip rather than just buy right now like I might do with other markets. All right, let's talk a little bit about the market on Bitcoin, though. As you know, Bitcoin has dropped significantly over the last 24 hours. We've been speaking quite a lot on trade setups, and one of the trade setups we talked about was what happens if Bitcoin falls below this uptrend, and so that's what's kind of happening right now. If you look at Bitcoin, there were a few different levels that were very important and that, you know, frankly still are important. One of the most significant is the level at 28,545. This is a level that has been significant for a very long time on Bitcoin, and it goes all the way back to price action that we saw all the way back in June of 2021. The market fell back down to this level back here on June 22nd. Right here it says 28,778 on most markets. This is Coinbase. On most markets, it actually shows 28,545. So 28,545 to 28,750 or so are the kind of the zone, if you want, that we need to look out for. However you want to draw it. The fact of the matter is somewhere right around this zone has been very crucial for Bitcoin. And also we have this uptrend forcing Bitcoin into this ascending wedge. This ascending wedge is also something you've probably seen in the news. It's very significant on Bitcoin because it's been pushing Bitcoin's head up against this zone of resistance around $30,000, $32,000, that zone for quite some time. This ascending triangle pattern obviously is going to have one of two breakouts, either a massive break bullish or it's going to have a break to the downside. The fact of the matter is Bitcoin is currently breaking down, is currently breaching this uptrending level of support. And I would say that's probably a good thing, to be honest, because building a market off of an uptrending level of support is a little bit finicky. Think about it like this. It's a little bit like building a skyscraper, and you've got one pile-driven support that goes all the way down to bedrock. And if it breaks, then all of a sudden the whole thing falls over. Not the most stable force. You want to have more market structure than just an uptrend to help build the strength of the market in the minds of the investor. And so when we see that there's only this one uptrending level of support on Bitcoin, and then we have our uptrending, our flat level at 28,545, as we start to break through both of those, I'm actually kind of happy about that because this gives the market a test. This is a decision point. This is a decision phase for the market. On this market, we're going to now see, is Bitcoin going to go through a major drop here? Or is it going to bounce, turn around, and go through a rally? How far will Bitcoin drop now that the floor has been pulled out from underneath it? This is a great time to analyze the strength of the bears. If the bears do manage to pull Bitcoin all the way back down to $25,000, then we know, all right, there's a lot of pin-up bearish pressure. But if Bitcoin breaks its two most significant support levels and zones, which are what we're seeing right now, which is what we're seeing happen right now at 28,545 and the uptrending level of support, and Bitcoin only drops down to 28K and then it bounces and then starts a new rally, then we know, okay, Bitcoin was very close to the bottom. There's not very much strength in the bears. And so we can confidently assume that Bitcoin is going to be able to move to the upside with strength now. One of the reasons that I think that the latter is going to happen, you're going to see a higher bounce and then a higher bottom, a higher floor, probably somewhere above 27. Is because all of the bullish news is taking place. When you look at the market, you are seeing huge steps in adoption. You're seeing PayPal opening up the cryptocurrency hub with PYUSD, which is their own stablecoin. You're seeing the Jacoby Bitcoin Spot ETF going live on the Amsterdam Exchange. You're seeing Coinbase get an FCM license, get FCM approval so that they can have a futures market for Bitcoin and Ethereum. These are three massive stories that have happened just this week. Just this week. BlackRock is still working on a Bitcoin ETF. Grayscale, ARK Invest, VanEck, all four of those, including BlackRock, are in the process of attempting to get a Bitcoin ETF. Probably won't happen, but it's just making the case even stronger for after Gary Gensler finally gets his tail out of power and goes back to his food bowl and a pineapple somewhere. Once we get somebody in charge at the SEC that is at least not hardline against cryptocurrency for ideological reasons, then we will finally get a Bitcoin spot ETF, and every single one of these ETFs that's been rejected just adds on to this pile of rejections that just says, wait a minute, maybe every single one of them has been rejected, but how do we possibly level an argument against a Bitcoin spot ETF being approved where I don't have a single argument that hasn't been addressed by one of those applications? What I mean is this. Let's say there's 10 different things, but with spot ETF applications, there's different issues. There's surveillance sharing agreements. There's issues of dispute resolution. There's issues of ensuring that there's not market manipulation taking place. There's all these different issues that the SEC brings up with a spot Bitcoin ETF application. If you look at the sum total of all of the ETF applications, and you're an organization rather, because organizations file ETFs. If you're trying to get an ETF made for a spot Bitcoin ETF application, you're going to be able to look back at that and you're going to be able to say, okay, the SEC thought that this was okay for the surveillance sharing part of things. They thought that this was okay for the making sure market manipulation thing doesn't happen. This is what they thought was okay for the custodian. They thought that this custodian would work. This is what they thought would be all right for the way that the fund is managed, whatever you want to say. And someone, either BlackRock, VanEck, Grayscale, ARK, those are the four major players right now, is going to say, all right, we're going to put an ETF application in that checks every single box. And they've been doing this for years, by the way. This is not a new trend. This is not something that's going to start in 2 years. This is something that's been going on. The ETF filers look at the history and say, the SEC objected here, here, and here. We're not going to do that. We're going to try this because we know that they'll accept that because they accepted it in this case. There's legal precedent for it. And then we're going to put together an ETF application that they should accept. Gary Gensler, again, just knocking him out of the sky like he's an AA gunner at Pearl Harbor, but he's not going to be there forever. Come the 2024 presidential election, pretty much no matter who's elected, whether it be Biden or Trump, and it probably is going to come down to those two old geezers once again, you are going to see somebody replace him. More than likely. It's kind of the custom at the SEC. A new president comes in, the reigning chair steps down, and somebody from the commission steps up. Hester Pierce is on the commission, so there's, theoretically a 1 in 4 chance that she would step up. That'd be the best case scenario. But even many of the other commissioners would probably be a little less hardline against crypto than Gary Gensler is. So you're probably going to see that get approved at that point. But, and this is where our comments section comes into play, as Daniel Eklund said, if you were BlackRock, wouldn't you want to crash the market first and then get a Bitcoin ETF application approved? Yes. BlackRock is one of the most powerful companies on the planet. If you don't know much about BlackRock, just a quick biography. Founded by Larry Fink, 6 other co-founders in 1988. They took $5 million in assets under management to $8 billion in 5 years. They launched a program called Aladdin in 1998, which helped them to predict what stocks were going to perform well, which stocks were going to last, which stocks were going to disappear. Then they launched something called iShares. It's their own flavor of ETFs. They've got hundreds of their own ETFs that they personally corporately manage. And they are the largest asset manager on planet Earth with over $9.5 trillion in assets under management. They are one of the most powerful companies on the planet. And if you're a company that they invest in, which if you're a company, they probably invest in you, then if you try and make a major decision, then you have to go through BlackRock. Fox, Comcast, and Disney are 3 companies that have to check in with BlackRock before they make an executive level change because they are the majority, they are the largest plurality shareholder. At Disney, for example, BlackRock holds 4.13% of Disney stock at last check-in that I could see. It's somewhere in that range. It's going to go up and down a little bit, but somewhere around 4%. That's the largest single holder of Disney stock. So if Disney wants to make a change, obviously it's voter right shares, it's voting shares. They have to check in with the people that hold those shares. The individuals that are investing through their pensions, 401k, Roth IRAs, mutual funds, brokerage accounts, all that with BlackRock are not going to actually be the ones making that decision. The brokerage, or in this case, it'd actually be the asset manager, BlackRock, is going to be the one sitting in those meetings saying, no, we don't want Bob Iger to be in power anymore. We want this other guy to be in power at Disney. Very influential company and absolutely powerful enough to manipulate the market. And by the way, also large enough that they would probably be able to get away with it. So would they try and crash the market before they'd rally it? I wouldn't be surprised at all. I'm not going to bet on it because I don't know for sure it happened, but I wouldn't be surprised at all. And I am very confident at this point that within the next 5 years, BlackRock will have their very own Bitcoin ETF. I can almost guarantee you that BlackRock will have their very own Bitcoin spot ETF within the next 5 years. It will probably, there's a high likelihood, I would say a greater likelihood, that it'll happen after Gary Gensler gets out of power, and they probably also have some kind of inkling as to whether or not the SEC is going to approve it or not. They're not going to tell the public whether they think it's going to happen or not, but they probably do have an inkling that, okay, they're going to approve it or they're not going to approve it. And so thank you, Silver. So we can say thank you very much to BlackRock if they do crash the market, because that's going to be an incredible opportunity for the market to drop and for us to buy that market, and then for the market to rally and go farther. So is BlackRock going to crash the market before they have the ETF filed? Maybe. Would not be surprised. They're in the money-making business, and they can get away and have gotten away with a lot. But if that does happen, then that is a great opportunity. So where is Bitcoin going to go, and how do we capitalize on this? Bitcoin is falling below this uptrending level of support, falling below our equal lines here, equal levels here at 28,545 to 28,700. There's a few different levels that I think are going to be important here, and a few different technical indicators. And we're going to start off with LuxAlgo, because something massive just happened in the last 24 hours on LuxAlgo. We finally have a sell signal flashing on the daily chart for LuxAlgo, and this is where I'd like to start. If you guys aren't familiar with LuxAlgo, you should become familiar with LuxAlgo. It is an incredibly important technical indicator, and this technical indicator gives you buy and sell signals and tells you when the market's going to go up and down with absurd levels of accuracy. I have a strategy that very simply works like this. We look at the buy signals. If the buy signal comes in and we have this line right here, which is called the trend catcher, turn green to confirm the buy signal, then we believe that Bitcoin will hit its price target. And it's a LuxAlgo price target. So you can see the sell signal, the short signal right here. It's already a strong one. See the plus, see how we're red. It's a strong sell signal came in. It's not confirmed by trend catcher, but very well may be soon. Gives us a price target down here from $26,000 to $23,600. If that gets approved, then basically we have to contend with the idea that, wait a second, that's probably going to come true to some degree. Now, for example, if we look over here at this buy signal, we had a take profit starting at 31K, moved all the way up to 33.7. We did not hit the end of that take profit, and you can see as we move through time, it doesn't change. It stays at the same spot, and then it will kind of stair step up if it needs to. It began here at 31K. That's what we hit. We went right into that take profit zone, as you can see up there, moving sideways. Now we have this sell signal coming into play right now. Gives us the top of our support around 26K. Could we drop down to 26K? Absolutely, we could drop down to 26K. Is dropping down to 26K a bad thing? No, it's not at all. Something that jumps out at me is this trend line right here. This trend line is comprised of this bottom here. It's comprised of this bottom here. And if Bitcoin drops aggressively, then we could just establish a new uptrending level of support. Fall not quite down to the take profit. Remember, we are in a general uptrend rather than a general downtrend, which means that the bearish movements are probably going to be a little bit smaller than the bullish movements, which means we're probably a little less likely to hit the actual take profit on LuxAlgo for the bearish movements than we are on the bullish movements. Hopefully that made sense. We move to the upside aggressively, and then we move to the downside in a smaller fashion. Following that trend, I would expect Bitcoin would probably fall somewhere at this point, now that we've had this sell signal, to between $26,000 and $26,750. I'm going to go ahead and draw a price zone, a target here. This looks something like this, and this is not an exact zone that you should trade off of. This is not an exact zone that I'm going to live or die by, but I think somewhere in this region at this point, if this confirms, and it'll probably take it dropping below 28K for it to confirm, then that's where I think we might head. Now, remember, we talk about trade setups too. Trade setup for how we can make this, movement to the downside profitable. I'm going to say about $28,000 is where I'd say that Bitcoin's really starting to move into a confirmed movement to the downside. That's a local high right here at on May 28th, by the way. That would also be where we would likely see a trend catcher confirmation. So at that point, we can literally just set up a short position right below 28K with a take profit. Just put it right here around 26.6. Again, kind of dummy numbers, just something to get an idea of how to trade this by. Entry just below 28K. Really get a confirmation, because we could always just wick down here. We could be in the middle of a wick and we wouldn't even know it yet. We could be at 29K tomorrow. Don't want to enter a short trade until you have a little bit more confirmation. Confirmation, I think, would look pretty good with the sell signal we just saw on MACD. Trend RSI dropping below the 14-minute interval moving average at 46. And of course, if we see the trend catcher turn red, then that's great. So a sell setup, a short trade setup like this, may work. Now, remember, one of the things that I encourage you guys to do is to use one of two trailing stop losses, either a 0.1% trailing stop loss or 10% of the target price as a trailing stop loss. So in this case, that would either be 0.1% or 0.46%. I would probably encourage more of the 0.1% in the beginning than the 0.46% at the end. The best way that you can set up a trailing stop loss is to expand the trailing stop loss and make it larger as you're more profitable. Use a very tight conservative trailing stop loss as time goes on. And then as you're further into the trade, then you can scale back and use less of a trailing stop loss so you have more room for random market fluctuations and not getting stopped out of the trade before you really should. In this case, make sure you're using at least, and by at least I mean smaller than, a 0.5% trailing stop loss. Entry might be somewhere around 28K. Might be around 27.9 or so. Somewhere in there. Again, those are kind of the principles of principles of trading that we're applying here based on all the news and the market movement. Market drops below a floor that we use as confirmation to say, okay, we drop below this floor. We believe with greater than not likelihood. Again, everything's percentages, everything's likelihood. Greater than not likelihood that we're going to go into a large downtrend, not just a small thing. We're going to go into a large downtrend. So just after that level is hit, then we give the likelihood, okay, we're going to move to the downside. So we're going to enter a short trade. We're going to have very tight stop loss, very tight stop loss. We're talking very, 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 very big risk to reward ratio. Then we're going to use a very tight trailing stop loss as well. And then we can widen that trailing stop loss from 0.1 to 0.15 to 0.2 to 0.25 as time goes on. And we can make the most of that movement. So if Bitcoin drops, that's kind of how you could, that's how you could capitalize on that. Patrick Bateman in chat donated $2. Thank you so much. We always rise into a recession or a crash. Buy the dip? Smiley face. Yes, if there is a dip, I would highly encourage you to load up if that is in alignment with the investment strategy and plan that you have. Now, again, just brief overview of how I encourage you to do that. Take your personal income, subtract your personal expenses. You have a discretionary budget. Split the discretionary budget up into 3 categories: your wants budget, your investment budget, and your generosity budget, because that's pretty much the 3 ways that you can spend money. They're going to fall into those 3 buckets. Might be 40% of your discretionary income goes to investment, so use some of that to pay off debt and use some of that to invest in the market. I would recommend getting rid of as much non-mortgage debt as you can very quickly, and then after you've done that, then you can put some money into paying off your mortgage, but then you should have this lump sum of money that you can invest every single month. It might look like $600 a month, might look like $300 a month. Then you can split that up. Say, I'm going to put some of that into mutual funds. I'm going to put some of that into the crypto market. I would recommend putting even more into the stock market than into the crypto market. Absolutely invest heavily in crypto, but it's also good to be diversified. You want to be in crypto. You also want to be in markets that you know. If you're an expert in crypto and you don't know the first thing about stocks, don't get into stocks yet. I would encourage you to learn about stocks because it's a great way to build a long-term foundational strategy to grow wealth. The Bible talks about it's much better to grow wealth over a long period of time than a shorter period of time. It can be a curse for very young people to earn a lot of money very quickly. It's much better to earn that money consistently. You've heard the story, the slow and steady wins the race. But nevertheless, from doing that system, you should have this sum of money, maybe $300 a month or so that you put into Bitcoin. And then you can go ahead and do that. You can go ahead and put that money straight into Bitcoin during these dips. And you can also put some of that into a fund where you save it in some kind of stablecoin that generates APY. You could put it in a money market account. You put it in a high yield savings account right now if you wanted to. High yield savings accounts will get you 5% right now. It's ridiculous. When they normally give you 0.05, so 100x. Then if a dip does come, then you've got it in a stablecoin that generates APY. You've got it in, not Ethereum, but you've got it in either a stablecoin or in dollars, generating a yield some way, even if it's in short-term treasury bills, I don't care. Then when that opportunity arises, you have the ability then to say, boom, Bitcoin's down 26. I'm going to jump on in. It's a good idea to have cash on hand because there is a greater than normal likelihood that there could be a pretty large recession in the next 2 years. I've heard whisperings that certain large companies are encouraging people to be ready for a dip. That's all I'll say. That's all I'll say. A little bit of a rumor of a rumor of a rumor, but something that I take seriously. And I would encourage you to have some money on the sidelines based on what I'm being told, what I've heard. And I think that it is a good idea to have some cash on hand. Again, that cash could be in a stablecoin generating APY, could be in a money market or like a CIT bank savings account generating 5% APY. Don't care. Just have some cash on hand and always be dollar cost averaging. Those are the best things you can do. So we always rise in a recession or crash. The market is going to do a lot of big things when a recession comes. Be ready for it. Be ready to have a position already that you can capitalize on because you're in at 30K and it goes to 50. And also be ready in cash to buy a dip if it comes. Absolutely important. Hey, Jeb, can we take a look at the Dixie? Looks like some resistance coming up. If it gets smacked down from that, it might really drop. Let's look at the Dixie. Dixie's at 103 right now. It is getting absolutely wrecked right now on some resistance. If you guys have watched the Dixie, there's this long-term downtrend. Excuse me, it's not getting absolutely wrecked. It very well may come under, it very well may drop as a result of this. The Dixie has started to rally. There are many different trends globally that I don't have time to get into right now that could be leading to this, but ultimately the United States dollar is the most powerful currency in the history of mankind, and so the general trend you should expect to be up. That's been the general trend since 2009. A little bit like Bitcoin. If it goes down, expect it to not go down as far as it goes up. So we will, this is one of those moments where we have to wait and see. The prediction, look, could the Dixie break here? It certainly could. There's not really enough data specifically on Dixie to say just because this one thing happened that it's about to break bullish or it's about to break bearish. Again, applying geopolitics, economics, finance, the news cycle, and all of that into the Dixie, into the markets. I don't see anything specifically that says one way or the other that's going to break right now or not. But if the Dixie does drop, that would be a good thing for Bitcoin. It would help Bitcoin hold a higher level of support because the Dixie and Bitcoin are inversely correlated. All right, the whole world is in trouble. Yeah. That's there's a lot of fear in the market right now, and one of the things that I would just encourage you guys to do after you hit the like button, one of the things that I would encourage you guys to do is to not let fear make decisions for you. Fear is such a terrible decision maker. In fact, oftentimes, if you are afraid, whatever your first inclination to do is, oftentimes you should do the exact opposite. If you are afraid during the pandemic drop that, oh man, Bitcoin dropped from 6,000 down to 3,000. I'm gonna freak out. I'm afraid. I'm scared, right? There's that fear. Your first inclination is, I should sell all of it. In that moment, you should have counter-traded your fear. When the market rallied to $65,000, April 15th of 2021, and again, November 10th of 2021, when it hit $69,000, your initial reaction may have been, buy more. It's going to 100. Historically, it is a proven fact that the best thing to do at that moment, with the benefit of hindsight, which you don't have in the moment, but with the benefit of hindsight, is to sell, to cash in, to load up some, to offload some of your bags, pull some money out, profit and enjoy some of it, reinvest some of it, give some of it away. Again, there's 3 ways you can spend money. Fear and FOMO. Fear of, oh my gosh, it's going to go up to $100,000 and I'm going to miss out on that. Fear of missing out. Fear, uncertainty, and doubt. Both of them say fear. Oftentimes, fear, if you counter trade it, you will probably be more successful than if you hadn't. If you counter trade your fear, you're oftentimes going to be in a better position than if you hadn't. And even in my life, there's things that I've been afraid of. And oftentimes that leads to an initial reaction of, I'm afraid, so I should do this, or I'm afraid, so I should do that. And doing the exact opposite oftentimes is the best thing you can do. So, is the whole world in trouble? The whole world's always in trouble. Should we be afraid of that? Should we let fear guide our decision-making process? I would say no. Fear and greed index exists for that very reason. That's exactly right. Absolutely right. Bitcoin is here to stay. It's not going anywhere. Bitcoin is in great shape. Down it goes, the more I buy. Simple strategy. Boom. There you go. That's a proven strategy right there. Look, some of the altcoins, if you're trying to look at this from a long-term investment perspective, one of the things that's often taught is look at the market history. Is there a history of it goes up and then it goes down, but it doesn't go down as much as it goes up? Basically a long-term, never-ending bull market. You don't really have that on a lot of altcoins. In fact, you only really have that on one, and that's Ethereum. If you look at Ethereum's chart, it's got a long-term bull market with smaller bull markets and smaller bear markets in the middle. Kind of the like alpha bull market. Bitcoin, same deal. There's not a single other cryptocurrency in that state. Even as much as I love Cardano, Cardano's really not there right now. Cardano, I guess you could kind of say that it is. Based on looking on, you'd probably have to look at it on where? Kraken, maybe? To look at the long-term chart. You could potentially say that we have seen that because we've seen 2 higher highs and 2 higher lows. But really, what I'd like to see from a market that I'm going to say this is a core investment is I'd like to see this. I'd like to see a high, 2 highs, 2 higher lows. Cardano actually does kind of fall in that camp. So I rescind that statement. But at the same time, when Ethereum hit this all-time high at $1,400, it was worth hundreds of billions of dollars. Cardano, was a little bit smaller. So love Cardano, not against Cardano. But if you're trying to invest in the cryptocurrency market, I would start out with Bitcoin and Ethereum and branch out from there. Those are your best bets because those are the proven market participants. And that's where you're going to have the long-term success. Again, that's where you can bank on, all right, I'm going to go in on the strategy that goes down, I buy. That's simple. The amount of things built on Ethereum and Bitcoin is absolutely ridiculous. Really appreciate all of you guys tuning in. We are going to go ahead and wrap it out because it is 10:45. Thank you guys so very much for tuning in. If you did enjoy today's video, I want you to do a couple of things. First and foremost, hit that like button and also make sure to subscribe to the channel. If you have not already subscribed to the channel, I would highly encourage you to do just that because we are bringing you high quality coverage every single day on cryptocurrency and global markets here on Coffee and Crypto, and I would love to see your smiling faces here in chat from day to day. I love getting to know each and every single one of you guys on an individual basis as much as I can. We've got more content coming that I think you guys are going to really, really enjoy. It's my dream here to help you guys stay up to date on the market so that you can make some money in the markets and make a change in your life and reach financial sovereignty. If you are on that boat, and make sure to sign up also for Club DeFi's Principles of Technical Analysis. If you guys have not already done so, I highly encourage you to check out Club DeFi. You can find it over here by going to bitcoinacademy.teachable.com or the first link in the chat, in the description box down below. Principles of Technical Analysis is going to teach you everything that you need to know about technical analysis so you can hit the ground running and get a solid foundation in technical analysis so that you can apply everything that you're hearing in the news and everything that you're learning here on Coffee and Crypto so that you can go and make profitable trades and investments. I'm so excited to bring Club DeFi's Principles of Technical Analysis to you because I want to help you guys become profitable traders, and I believe an investment in yourself is the very best investment that you will ever make. As I said, that's going to wrap it out for today's stream. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.